Good afternoon from DripsMedia. Welcome to our global newscast for Monday, October 27th. We are tracking several key developments in the U.S. economy today. Official data reveals a surprisingly strong economic expansion in the second quarter, significantly outpacing initial estimates. However, this positive news is tempered by a persistent rise in consumer prices, with inflation holding firm. Meanwhile, a slight uptick in the unemployment rate suggests a cooling labor market, even as the nation's trade deficit shows a remarkable improvement. These conflicting signals paint a complex picture of an economy at a crossroads. We begin with a major economic update. The U.S. economy demonstrated remarkable strength in the second quarter of 2025, with the Bureau of Economic Analysis issuing a significant upward revision. Gross domestic product, or GDP, expanded at a robust annual rate of 3.8%. This is a substantial increase from the initial estimate of 3.3% and marks the strongest growth since late 2023. The surge was primarily fueled by stronger than expected consumer spending and a healthy increase in business investment. This indicates that despite economic pressures, the consumer remains resilient, a key factor that could influence the Federal Reserve's upcoming decisions on interest rates. Despite the strong growth, inflationary pressures continue to affect American households. The latest Consumer Price Index, or CPI, shows a 0.3% increase for the month of September 2025. This brings the annual inflation rate to 3.0%, the highest level since January. A significant driver for this monthly increase was a sharp rise in gasoline prices. Core inflation, which excludes the volatile food and energy sectors, rose by a slightly more subdued 0.2%. These persistent price increases are keeping pressure on family budgets and remain a central focus for policymakers as they attempt to stabilize the economy without stifling growth. Now to the labor market, where we are seeing signs of a potential slowdown. The national unemployment rate in the United States stood at 4.3% in August 2025. This marks a slight increase from the previous month and is the highest level of joblessness recorded since late 2021. According to the Bureau of Labor Statistics, the economy added a modest 22,000 non-farm payroll jobs, continuing a trend of minimal change that has persisted for several months. This cooling in the jobs market could ease some wage-related inflation pressures, but also raises questions about the durability of the recent economic expansion. In international trade, there is some positive news for the U.S. economic ledger. The nation's current account deficit, which is the broadest measure of trade in goods and services, narrowed significantly in the second quarter of 2025. The deficit shrank by over 42%, a decrease of $188.5 billion. As a percentage of GDP, the deficit fell from nearly 6% to just over 3%. This substantial improvement was primarily driven by a narrowed goods deficit, reflecting a notable decrease in imports, while exports and other income from foreign residents increased. This shift suggests a more favorable trade balance, which contributed positively to the overall GDP figures.